The mid-cap sector is flying right now and is the top market performer for 2026. And the best part is that there are still some massive opportunities getting ready to boom. We'll uncover 3 of those opportunities and give you our signature playbook so you can watch these stocks like a pro. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide. I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening.
Good evening, Phil. One of my favorite parts of the market, the mid-caps.
Yes, and they are flying right now, a sector that is going under the radar, but we've got 3 in store for you that are getting set up quietly to get going. So let's get into the first one, which is Dyno Nobel Ltd. Now, DNL, Pedro is the code. A little bit of information on this one. They're in the explosives business. Explosives demand for global miners will be the biggest driver for this company as it is in a transformation stage, getting into a pure play mining explosive business. Its falling gas and energy costs could materially improve margins after exiting the troubled fertilizer division. It's been in the fertilizer division, it's getting out of it. The other thing to think about is a slowdown in China or commodity demand would likely hit mining volumes and pressure earnings growth. Now, when you look at this share price, to me, it doesn't get any more cyclical than this. Really repeatable types of price movements, this one, which is what you expect for stocks in those cyclical areas of the market, this one being the mining space. And right now, what's interesting about this one for me, really, it's very obvious, the $2.20 level as the support level, and we have the $4.20 level, if I can bring it up, $4.20 level as resistance. Now, this stock here has been fluctuating between these 2 levels literally since 2009. So almost 20 years we've been doing that. What's really positive about what we've seen recently is that we've had a break of another crucial level through here for me, which is that mid-level that the stock has struggled around $2.90 for quite some time, popped up. Now we're testing $2.90 on the flip side, broken out beautifully on the monthly chart. I think Dyno Nobel has a really nice run ahead of it up to that $4.20 level, which is about 20% upside there or 20% buffer. If it can get beyond there, then boy, if this is a massive accumulation period, we could be very well on our way for a huge run. And if we are in a commodity super cycle, I mean, just take yourself back to 2007 and 2008, where our market is a commodities story, always has been. When it does get going, usually late cycle materials, commodity stocks, they boom the hardest. So if this is likely to be a cyclical unfolding like that, as opposed to what we've seen over the past 20 years, which is very uniform from 2 to 4, well, we could see a really strong explosive run, but I'd be, that's all ifs and buts. I'd be just working with what we can see in front of us right now, and that's at 420 for the immediate upside. But love the fact that we've bounced on $2.80. Now, if we go to that weekly chart again, this price action here tells me a lot. I mean, we had a really big flush out during March, but look how quickly the market recovered. You know, one strong week of flush out was quickly recovered by buyers coming in late March and pushing this one up to new highs. And now we've seen that really powerful buying last week, huge buying in the midst of a market that has been down. We're talking our index that has been down for 4 weeks, and look at the last 4 weeks of Dyno Nobel. It's been bucking the trend. So if we are, approaching a bit of a reversal for our index after a 4-week pullback, and we start to get green prints over the next month or 2, this one's already taken the lead. So your thoughts on this, Pedro, Dyno Nobel, in terms of where it's likely to head to in the next couple of weeks, bud?
Yeah, sure. I mean, that explosive price action that we saw last week, that was off the back of a report that came out where they basically reported an 81% increase in their underlying first half fiscal net profit after tax. So it was quite a significant rise for their profit margins, and that's why we saw that huge spike out of it. But the technicals was showing something beforehand, and that's really what I like to see. We can always have a look in hindsight of these moves when they do these types of reporting, but let's have a look at what would have given us some indication where we could have actually capitalized off that growth and already have been in that rise. Well, the first thing that I can see here is if I outline this little period here, in a yellow triangle, outline this period here, look how similar it is to this period over here. So that would have given you a little bit of an indication that something was going to happen. And of course, there's a lot more that I can put into this, a lot more technical analysis that was signaling that reversal of the trend. We've got, short-term bar analysis. We've got all the opens and closes. That this color coding that we've got here on the chart, it's a color coding that we use, that we teach in the course. And already just visually, you can see, all the different price actions and what would have given you an indication that this was going to jump up. So this is a very technical stock, which I really, really like. And I agree with the levels that you've marked up ahead, Phil, that level there that we've got. It's a pretty important level of resistance at around that $4.20, but it does look like it's about to challenge it. So whilst it may be pretty close to it at the moment, I'm not sure if your risk to reward ratio would be there, seeing as it's got about that 13% up, maybe 15% downside to that previous low. I think that it's definitely one to watch because it does have the fundamentals behind it. If we see a little bit of a pullback, that may get a little bit of a better price entry, but still, this has the steam behind it. It's got the tailwind of the material sector behind it. It's looking really, really nice. I'd just really like to see it break above that $4.20.
Yeah, fantastic. All right, if you want to get into learning some of the stuff we just spoke about, especially Pedro, as mentioned, reading those chart analysis that we do here, go and check this book out. It's How to Beat the Managed Funds by 20%. It's free. It's from Dale Gillham. It is, you just have to pay the shipping. The link is in the description in this video below. But if you do want to take things to the next level, please go and visit the website, wealthwithin.com.au. Look at the testimonials, see what's possible, especially in this environment with our market being in this major commodities boom that it's in right now. Go and check out the Diploma of Share Trading and Investment. It's government accredited. We always keep saying that, but it's important because just speaks to the level of information you get in that. There's none other like it around that we're aware of at the moment. But let's move on to our next stock, which is Steadfast Group Limited. Now, Pedro, this one here, if we go to the chart, is a very interesting stock. And right now, it's, I have to say it is in a more riskier position than something like a Dyno Nobel. You're banking more on a reversal story, but again, it's in that mid-cap space around $4, which is the theme with a lot of our stocks around that $4 range. But it's a mid-capper in a sector that has been performing really well. Some metrics on this one. It's got higher insurance premiums globally, continue boosting Steadfast commissions and recurring earnings growth. It's got ongoing acquisitions and broker industry consolidations remain a major catalyst for expanding market share. The only thing to think about is a slowing economy or easing insurance pricing cycle could eventually reduce earnings, momentum, and pressure valuations. But when you look at this, I mean, if that were the case, it's already come off a 41% correction, right? And where it's come off that 41% correction is literally on the long-term sustainable rate of rise, which is this momentum. Now, am I saying today's the moment to go? Well, no, but is now the moment to start looking at this stock? For sure, because if you haven't realized, I mean, our market right now, yes, we have certain pockets that are performing, but there are large sections of the market that are going through that re-rating, cycle right now. A lot of the healthcare stocks are going down. Big, strong, powerful healthcare stocks are falling, getting re-rated back to, I guess, fair valuations to some degree. We're seeing a little bit of it with the banks potentially starting to head in that direction. When I see this one, the last major fall that it had was back during 2020 COVID, where it fell about 45%. Now we're around in those, metrics again. Throughout history, it has performed like you would like to see with one of those stocks in the insurance space. So I think right now what's interesting is the way this low's unfolding. We fell back in February, had a few months up, not uncommon to keep filtering around these lows until we find the strong base. We went back and tested in May that previous low on the momentum line, and look what's happened. The second we took out that February low, buyers have come back in, really picking up this stock. And I'll show you on the weekly chart what I mean by that. But we saw a bit of a test last week of the low 2 weeks ago. Initially, buyers came in last week to pick that up. Now's the make or break for this one. If this can really turn around from here, we may be looking at an early stage reversal story. So one to bear in mind, of course, it is naturally going to be higher risk at these levels. I like that we've seen volume start to pick up a little. We've had a bit of that flush out volume right now. And that's the other thing to really consider, because big down bar on the 31st of October. And if you were going to ask yourself the question, is that a flush out bar or is that a continuation bar? Well, look what follows next. The next few months, bit of consolidation, we continue falling lower. Here's another big flush out move on big volume or a big down move. Is it going to be a flush out move? Well, if it's not, we should see really serious selling on the way down. But what are we seeing? Consolidation. Sellers tried to continue to push it lower like this period through here. And guess what? They've been picked up this time. So selling is drying up. That's the first thing to watch out for. We are at key levels based on momentum, and you could potentially even apply another one coming through this level here. And so right now it's about, waiting for that and being able to recognize that turn properly. Have your rules in place, have your risk in place. And if it makes sense, then there might be an opportunity for this one to continue that long-term momentum on the way up. If not, if it takes out this low in June 2026, I think we're probably going to be a bit more bearish and head down to that $2.80 level. And the beautiful thing is, set and forget, put it away, forget about it, and wait till the next opportunity were to arrive if it does. But right now, for me, it's in a very interesting spot. Pedro, your thoughts, mate?
Yeah, it is very much interesting from a technical perspective. And this one is actually another casualty of the AI revolution, if you will. So, more people are worried about, being a insurance broker, that they're going to get cut out of that, chain of communication between the purchaser and the actual insurance agencies, based on AI and generative models. So this latest scare is based on that story that AI is going to replace brokerage. But of course, these types of brokers, they're insured, they're regulated by the government, and they provide expertise in certain areas. So I don't believe that it's going to be as bad as people think. And it's interesting that this last sell-off in April 2020 was due to COVID. It was actually in an uptrend. And if you were to take that out, that little glitch out, it's just moved up consistently since 2016. So what was the market seeing here that it's not seeing right now? Well, this was a temporary COVID glitch. Right now, we've got the AI story that's driving it further down to that momentum that we've got there. So is this another opportunity? Because when the last time we had that scare, it actually ended up rising another 172%. So being at that level there as well that you've marked, feel that around that $4, I agree that it's at a precipice, and it is slowing down technically as well. So could this be just an overreaction? The fundamentals are signaling to a possible yes, but of course, as always, like we say, we like to see the technicals show first confirmation, as they usually catch up to the fundamentals. So at the moment, the only worry that I have really is that it's broken below this previous low. It hasn't closed below it, which is a tick to the upside, which is good, and it is closing high. That's the only thing that it's dipped slightly below it. But hey, at the same time, it is comforting that it actually didn't get driven down and closed down. So it is holding up around this level. So you might want to wait until it closes above that $4.30, $4.40. If it does, I think that this one could actually go on a nice run. And the next resistance that we have would be around this area here, this congestion around that $5.40. You can see that was a previous high and multiple turning points here. So there's enough upside to it, definitely, to warrant some type of short to medium term trade.
Yeah, one a bit risky. Set it aside for that risk portfolio if you've got one. But let's move on to our third stock, which is Reliance World Corporation. Now, this one, again, is a bit of a reversal story that we're talking about, which is very interesting. But nevertheless, another one quite cyclical in terms of the way it's been unfolding. The story for this since listing has been a case of ranging between $2.83 and $6. And honestly, when you get price action like this, it's some of the best price action to actually trade, because you really have defined parameters on where this stock likely bounces from. And right now we're at the, I guess, best risk reward opportunity of that range being right at the bottom. And, we've seen a bit of buyers come in, not overly strong. We've seen this month pull back down. So I'd like to see a bit more of a continuation here and potentially close above the April high for May. If we get that, that's a good sign. But nevertheless, we should expect that at these levels throughout history, if you were to guess against history, then you'd be missing out on some amazing opportunity and some amazing upruns all through these periods from that 280 level, which you saw a 100% run up through there. We had another run through this period through here, if I can get my mouse to work properly, but that warranted another 100%. And then, initially in 2017, we had that strong run. So right now, that is defined. I mean, it's some numbers on this. US interest rate cuts and a housing recovery are the key catalysts needing to drive earnings. Improvement, the tariff, supply chain costs and weaker renovation activity remain the biggest risks to margins and profits. However, this is the big point that's been happening lately, is a $120 million share buyback, which signals management believes the current downturn is cyclical rather than structural. And I'm not going to get into too much of the US fundamentals and what they're looking at in terms of rate cuts or rises, but right now, purely from that technical play and the confidence that management is pouring money into buybacks at these levels, you've got to say, well, okay, maybe a little bit more of a riskier type opportunity, but boy, it's a turnaround story that offers really good reward if you can get it right. And for me, I think once we break through this momentum, at $3.70, I'd start to get interested in this stock. Until then, you're playing with fire, so be careful, but really start watching. Any stock that's at crucial key levels is worth a watch for me, especially in the mid-cap space. Your thoughts, mate?
Yeah, absolutely. I think this is my favorite out of the bunch. This is a plumbing play, so it's kind of like a Reese Plumbing. That's probably more well known to everybody. And this is why I've overlaid here in black the price chart of Reese Plumbing. You can see that they're very much the same in the way that they move. What's comforting is that if I move this up, you can see that this price action of Reese Plumbing, it's already gone up quite a bit. So it's actually recovering, in the short to medium term, whereas Reliance has not. So this, if to me, it's a little bit of a leading indicator, leading technical indicator that something could happen actually shortly. And the fact that this is actually consolidating sideways and not having that dramatic fall, it's not falling sharply. So right now, price is compressing. It's going to either shoot to the upside or to the downside. And my probability would be that it's going to shoot to the upside. I mean, you only have to look at this previous low here as well. And I mean, there's multiple times. This is a very cyclical stock, but right now, that bounce of that $2.90 has been quite strong in the past. And I like the upside that it has to it. And I do like the fact that you can just put a nice little momentum down there and just wait till it breaks to the upside. So this one could trail sideways for a little bit longer, or it could take off soon, but definitely one to keep on your watch list and ride the trends, because this is an easy one to trade. It's easy to ride those trends to the upside, and you can put a nice trailing stop loss behind it and maximize your profits.